A special episode of Boxmining here. Today, this is an epic debate. So, we're not going to have a normal interview style format. This will be an outright discussion war. I'm going to throw some heavy punches here for absolute sake. And this is concerning a topic that is one of the most popular topics, I would say, of 2020. Because starting in 2020, we have the concept of rebasing, and rebasing is quite easy to explain. So I'm going to just show you guys some coins. I actually brought props today. So this weird, okay, you can see this slightly larger coin. This larger coin is a $1 US dollar coin. I'm not sure why this exists and why I have it, but this is a $1 coin, and a rebase function can practically take a $1 coin and convert it to 4 quarters. I have 4 quarters up here. That's like such a weird way to figure it out. But that's kind of how the rebase function works. The end result is still $1 on both sides, but now the value of the individual coin has changed in value. So now this coin is now worth 25 cents rather than a single dollar. But you have 4 of these. So I know that's kind of the fun way to describe. Anyways, that's kind of the idea of a rebase, but it's being used in a few interesting purposes. And today we have Naren here. So we're going to talk with Base Protocol about what they're trying to use. So taking a start of this, okay, so what's your stance on Base? Like, how are you guys using this rebase function starting off?
Sure. So you can use the rebase function to peg to any underlying asset that you basically want that rebase token to track. Most popular one and really the pioneer of rebasing and elastic supply is Ampleforth, which is pegged to United States CPI. Roughly, you can say they are a digital dollar that just accounts for inflation. And we've seen a bunch of different use cases, pegs to all different kinds of things in the real world. In Base's case, Base, which is the Base protocol's token, is pegged to the total market cap of all cryptocurrencies. And the goal is basically that in that way, we're creating an opportunity for Base holders to speculate on the entire crypto industry all at the same time with one token, rather than just one cryptocurrency or some tailored portfolio strategy. They can now kind of trade Base as almost an S&P 500, but for the entire crypto industry.
I think that's like the idea of having an index is great. I think I'm not going to argue of having an index, right? So we have, in the over a few years, we have already seen a few, top 10 crypto indices trackers, right? We also have what FTF affectionately calls shit, SHIT. Literally, it tracks like low cap altcoins as a tracker. So having some sort of indices for the entire cryptocurrency marketplace is quite interesting, because obviously it allows institutional investors to get in if they want some sort of crypto exposure to the entire cryptocurrency space. That's great. But I would say, starting to argue, the idea of rebasing, the functionality of rebasing doesn't exactly deliver what a indices tracker should do, because at the end of the day, sure, it can peg its price up to a particular asset eventually because of the rebasing function. I mean, converting a dollar to a 25 cents, or in this case, not to 25 cents, but to indices for the crypto market. Sure, the price will be the same, but the functionality of a rebase also means that the value of everything here is still the same. So I would kind of argue that at the end of the day, traders won't actually look at your actual exposure is not to any of the pegs that it tries to establishes. But I would try to argue here that the functionality of a rebase doesn't really do much if you just look at the effective value. So if people start looking at the market cap of your coin, because at the end of the day, a dollar is still a dollar, then that's kind of the only exposure you really get.
Okay, so yeah, there's a lot to what you said there. And the primary framework that we have to think about as we kind of dig into this is speculation on the underlying asset itself, and then speculation on the rebase token. So in the case of Base protocol, there's the underlying asset which Base seeks to represent, which is the total crypto market cap. And then there is Base token itself, right? In a perfect world where Base is very accurately pegging to total crypto market cap, Base is effectively just a channel to speculate on total crypto market cap. But that perfect world doesn't exist. There's going to be a lot of volatility and different kind of effects on Base's price that is going to break that peg to where the peg is significantly disrupted. We've seen this as it's happened with Ampleforth, where Ampleforth is supposed to trade roughly at $1, but we've seen it as low as 50 cents and as high as almost $4. So in that respect, it's not pegging at all, to your point. It's essentially not serving its utility. But the thing is, that's what's kind of naturally going to happen over the course of adoption. In the course of adoption, as people are speculating on the token itself and not its underlying asset, but they're speculating on future utility for the token, they're going to disrupt the price peg. But as that adoption occurs, eventually a popular threshold of exposure is reached. And these are what we kind of call stable periods, where the arbitrage on the rebases isn't so wild and you see a more stable range within the peg. And at that point, it gets closer and closer to serving as an accurate peg. But you're absolutely right. There are going to be certain periods, what I like to call formative periods, where the peg is disrupted.
Okay, yeah, I think I started off too much information dump, and I think we definitely agree with you. We should break down the issues at once, right? So I think definitely looking at Ampleforth is interesting. I think we've already looked quite a lot at Ampleforth on this channel, but not formally speaking. So I'll roll back a bit. So Ampleforth has been one of the most interesting coins, and it's the one that really started everything, which is why we're kind of talking about it, right? And Ampleforth had a very interesting phenomenon where it gained a lot of interest over time because as it kept gaining interest, so the price was above $1. And because of this rebase function, it's targeting $1. So every time it's above $1, every day it'll try to increase its supply. Right. Yeah. So that's kind of the basic functionality. Let's say Ampleforth right now, let's imagine it's back in the fun days, good old days of roughly around $2. Then every day around 10 a.m. in Hong Kong, we were looking at this as well, it would rebase and and give extra 10% to everyone holding Ampleforth. So this obviously would cause the price to go down. And that's kind of the dynamic it wants. It's using this mechanic to try to peg it to $1, try to peg the price of the currency to $1. But the side consequence of the rebase function is that it creates more tokens for everyone. So whether you're on an exchange, so if you have the Ampleforth on an exchange or you have it on your wallet, even if you have it on a ledger wallet, right? Even if you have a hardware wallet, it's still going to change the supply. And this is kind of the power of the rebase function. It affects everyone the same, whether it's on the exchange, and it also affects Uniswap too. So all of a sudden on Uniswap, it deals with this rebase by dropping the price down, but that's another story for another time. So I think that's kind of interesting. It's a fun concept. And during that kind of Ampleforth pump, so we saw a huge rise in Ampleforth kind of interest. Something that was kind of interesting was that people just kept getting more and more Ample in their wallets. And the reverse is also true. So right now, if Ampleforth dips below $1, it'll do something called a debase, where it actually globally shrinks the supply. And I've actually had people just message me. They're like, oh, I bought 1,000 Ample, but now I have like 500. Why is this? I messaged exchange support staff and they're like, yo, like, did you just rob me?
Right.
But it's actually intrinsically part of the functionality of Ampleforth. So it is very confusing to a lot of people who are uninitiated, and it kind of tries to establish the price peg by either rebasing, which is creating more supply, or debasing, which is decreasing its supply. So that's kind of the functionality here. And what we were kind of talking about earlier was that because there are these volatile periods, right, where Ampleforth was above $1, then it keeps rebasing to become a below period. This is right now, it doesn't serve much functionality because it's not stable enough. But once at a certain point, it establishes the kind of equilibrium where the price itself changes, then what doesn't change much, where the amount of interest in Ampleforth is around the same, then there's a stable period where it can function as $1, right? Kind of. But
Yeah.
but the stablecoin argument. So okay, so we kind of explained everything. So now I think we're on the same point. And guys, if you guys want to have any input into this, feel free. Of course, this is open. We did this live for a reason because we want to be open to everyone. So if you guys have any input as well, I just wanted to kind of clear the air here and talk to. So I hope everyone is on the same page. Tell me, guys, if you're on a different page, etc. This kind of rebasing functionality, I've kind of all grouped it as one as well. Just talking to you guys. It affects both AMPL based and base protocol. So just confusion there. Unfortunately, we tagged the wrong
Real
based.
quick, Michael, can I ask you? You had a really awesome graphic that you shared on your Twitter before that showed like all 8. It's not on your Twitter anymore. If we could pull that up so I could reference it as we kind of go through this, it'd be cool.
Okay, let me find that. It's gonna be a. Let me see if I can find that dude here. I think it's shared on Boxmining. If you guys also can send it, it will also be cool because I have a million things. Let me see. I think I shared it yesterday. Yes.
It was
by the way,
shared, but that tweet's not there anymore.
Really? Oh, okay. Give me a sec.
Real quick, Michael, can I ask?
Give me a sec. So I'm just let me just give me a sec. Also, there's a little bit of a choppiness with your mic. Do you mind if you can see if there's any reason why that is?
How about now? Does it seem any better?
Yeah, much better.
Okay, great.
Yeah. Okay, copy. So let me see how to share on screen. The best way would be via Brave, I guess. Okay, so how do I share this over? Copy. I'm sure the tweet will reappear, I think. Yeah, so Angela's helping us find it. So I'll find it and you can pull it up on screen for a sec. It's just a little bit disorganized. So I think we're okay.
Yeah.
Okay, so moving on. So let's talk about. So we see so many different projects, and they're all trying to use the rebase function, and I think the hope is that optimally it'll be stable, but. Crypto, Bitcoin hasn't always become the stable price. I mean, if you look at, I think the best way I've always thought to look at these rebasing coins is to look at its market cap, right? So optimally, during a stable period, the market cap of the coin would be exactly the same. It would be exactly stable, right? Because the price times the amount is stable, and because there's no fluctuations in price, the market cap will be stable. But we know, ever since the 10 years of Bitcoin, right? Bitcoin has never been stable. It's a crypto asset. It's a synthetic asset. All these coins depend on the amount of interest in it. So I think one of the strategies I've deployed when dealing with rebasing coins is kind of to look at its market cap. And what you're saying is that you're hoping for a stable period where the market cap stays the same. But even if you look at the case of AMPL and the projects that come before you guys, it's hard to obtain to maintain that, right? That would assume that if during the stable period, it will assume that there's no new interest, or the new interest is absolutely balanced by the loss of old interest, right? There's a net zero flow of this coin, but that's yet again not really possible. So I feel like that's overly idealized, where a situation where you can enter a stable period, at the end of the day, when you want more people to use it, but because more people want to buy it, it's going to cause the market cap to go up, right? And the rebase function is still going to be triggered. So it's like, I feel like that's overly optimistic, like that you're trying to find that sweet spot, which I don't really think will even exist ever, even if it's being used as a commodity to be traded in this world whatsoever. That's too optimistic, I would say.
Yeah. Okay. So great point. The first thing I'd like to bring up, and I could pull up AMPL4's chart, but I mean, you guys can check it out yourself.
Just put it up. Okay, do a share screen. I think that would work the best. Yeah, I don't have anything set up on my side to share a screen.
It's disabled on my side.
Okay, let me enable it for you. Okay, let me enable it for you. Allow record. Make host. It should be okay. Now you should be a host.
Yep.
Okay, should be working, right? Okay.
So I should be sharing my screen right now. If we look at the way that AMPL4's traded since launch, we're kind of in this range here of floating between roughly $1.20, $1.20, $1.30, coming down to 80 cents, 90 cents, a little above $1, 90 cents, 90 cents. Then you see the huge wave of adoption, right? This was that formative period where people were first getting really exposed to Ampleforth, kind of during the big DeFi wave, and then you saw the correction down, right? And that correction represents the true demand for Ample as, you know, as a token, as a digital asset. And as that correction down happened, although there was a correction down, we still see a market cap increase. And that's where, you know, to Michael's point, he's evaluating a Rebase token not on price, but on market cap, right? Because ideally, Ampleforth's goal is to come back to float around that dollar. So what you then saw here is we're floating in the 80 cents, 70 cents, as low as 59 cents, right? Back up $2 and then 60 cents. Now what's interesting is lately, right? If you guys look at Ampleforth as of the last couple of weeks, and here we see 70, 80 cents, 90 cents, and then going up above $1, they're in a positive rebase cycle where they're now trading at $1.20, et cetera. So the point I'm trying to get across here is there was craziness in this period. This was that adoption, that formative period. And Michael, to your point, it is very difficult to get to that kind of like golden state of true stability. But what we can see here is that they have trended from craziness to a more stable environment. And I wanna get to your point there. So if you guys look in the description, Michael has characterized you know, kind of his stance in this debate, and one of the things that you say is Rebase coins should be evaluated by market cap rather than price. And if that is the case, it cannot be used to hold price pegs. So I disagree with this statement. I would just revise it. I would say Rebase coins should be evaluated by market cap rather than price. And if that is the case, Rebase coins cannot be used to hold price pegs perfectly. And so what I'm trying to imply there is that there truly will never be an environment where base is perfectly correspondent to crypto market cap. There will never be a world where ample is perfectly correspondent to CPI, because like you've mentioned, people can always buy it and sell it, which is going to inherently just disrupt that peg. But what can be achieved, right? But what can be achieved is a range where it can trade within a range of the peg. So you can achieve correlation. So real quick.
Okay, I think this is giving. Okay, do you want me to be evil or do you want me to be nice?
I would love you to be nice.
Because I mean, the more evil me, all right, you have chosen wisely. All right, because okay, so the more evil me would say that, I think it's kind of folly even to think that the rebase function itself will cause traders to trade a particular asset the way it should. All right, hear me out here. Because at the end of the day, look, $1 is $1. You get, if the rebase function doesn't change how much something holds, right? So the trader doesn't really have to look at its price. So if everyone starts looking at the market cap and just completely ignores the price, it kind of defeats the purpose of the rebase function completely. I would say this will be the rebase killer. Right? By looking at just purely the market cap, you can rebase 100 times, right? And I would say you can rebase to the number of anything you want, right? You can even change the thing that you want to rebase to every day. It doesn't really matter because at the end of the day, you don't change market cap at all, just purely by triggering that rebase function. So that being said, of course, people do look at the price, right? And I think it's this year, in the first year, where we're not used to the concept of a rebase function. So a lot of people still don't really fundamentally understand that when the rebase triggers, the amount of the coin you have is exactly the same. So you just don't have to look at the price at all. So that's kind of the confusion of this year. So this year, because we're just introduced to the idea of the rebase functionality, people are still confused because people are primed. You know, they're stuck in their mind to say, look, you know, let's look at the price. But in the near future, once there's more, I mean, we just have a few shout outs for both XETH, there's BTC, there is X, like everything. Like now, even CoinGecko is saying this is a rebase token. Maybe you should look at it differently. Maybe you should stop looking at the price. And I think once that happens, once people start learning this, then the rebase function doesn't come into play anymore. So then how does it even affect this price? The only thing that will dictate the price is interest in that particular token itself, the speculation aspect of it. And I will still argue even now, people really kind of, if you look at the negative side of it, right, people only really speculated in AMPL because they think they can hide the pump. Right, it's not just an adoption period, it was a huge pump, let's be honest here.
Yeah.
It hit the pump very well because it just dropped the price. So if people were looking at the price chart, which they shouldn't, I would argue, if they were just looking at the price chart for AMPL, they would say, oh, it didn't pump so much, there's so much interest, it didn't pump so much, let's buy more. But if you just look at the market cap, that is a true price of AMPL, I would say, rather than the actual price, if you get what I mean.
Yeah, there's so much to unpack there. Well, one quick thing, but before I get into really the important part is, because I'm just kind of realizing this as you're talking, we do keep saying that with the Rebase token, you should be evaluating market cap and not price at all. But what's really interesting is, and what makes a Rebase token kind of multidimensional is, yes, if you're trading the price action and speculating on the token itself, sure, look at the market cap and draw your technical analysis. However, the price is actually extremely important if you think about it, because buying Ampleforth at $2, right? If you understand like just the rebasing dashboard and what that technically means you're doing, it's saying if you're playing a huge gamble there, right? If Ampleforth is trading at $1.20 and a rebase has just happened and new supply has been created, people shouldn't really be buying it up. But if the demand for Ampleforth and the speculation that it will be a kind of stable dollar peg in the future goes up, they tend to do that, and they might often get wrecked. And as a rebase token, you're kind of, that's what you want. You want that wreckage to be the leash that yanks people to drive price towards the peg. So price is going to be relevant at some layer. But again, to your point, if you're just speculating purely on the token, then you look at market cap. But
Yeah.
to get back to what you were,
Yeah,
if you wanted to interject,
I think it's interesting because it really depends on how you look at things, right? Like I think that's a kind of the core here. The core is like if you believe something will happen, it might happen, right? That's a kind of interesting thing. Like it goes back to this money argument, right? And
psychology.
how the psychology of how everything works, right? So I think like if you stand by the fact that rebases are something that can affect traders, then sure, like following a positive or a negative rebase would kind of leash and tether the coin to a particular asset. But if you don't believe in rebases at all, which is what I'm nearing towards, I feel like the rebase function by itself, we'll talk about this later, right? Let's agree to disagree, but agree that there's two viewpoints for it, right? The one viewpoint that I take where rebase functions are completely useless, we just shouldn't even look at them. Like every morning I wake up, I just look at market cap, and that is not affected by a rebase, right? So if you just look, and if we change every single scale, if everyone's smart enough, right, to look at it, then fine. But then again, there are some people who do believe this, and then now we have the reverse is true. So
would you concede the point though that if like in a theoretical world, which let's agree that this is a perfect world, would you concede that if everyone knew what rebasing was and how it worked and was like familiar with their rebase dashboard, knew when the rebase was going to happen, how much the expansion and contraction was going to be for, that a pretty good price peg is achievable?
It depends, right? Because I actually did read your white paper, and you want to say, okay, look, this asset could be useful for the end functionality of, say, like institutional investors, etc. But I would disagree in the sense that we're too far. Like this is too theoretical to be useful for actual exposure to the whole cryptocurrency market. Like I feel like the dynamic of rebase tokens would be you're only exposed to that token, which is the truth, unless there's an external factor.
In the beginning, of course.
Yeah. which is kind of interesting. Like if there's an external factor there, because I've also had this argument where there's multiple indices, right? I mean, if you look at derivatives, how is that derived, right? People,
Yeah.
it's traded because it doesn't hold the underlying asset, which is
Right.
which would have been an argument that I would have used, but now we learned that derivatives can reflect the market prices of particular coins. For example, we already know that Bitcoin derivatives are trading like crazy. You know, all those like Bybit, FTX, Binance futures, all these futures don't actually hold underlying Bitcoin. People just believe it does. So it trades in that certain range and is used as a financial asset. But I do say that something that a derivatives has and that Rebase is lacking is this kind of formal punishment for not obeying the price. So say for example, if on a derivatives exchange, if Bitcoin was trading very differently from say actual Bitcoin prices, then you have funding fees, right? So on FTX that's every hour, on I think on Binance that's every 8 hours. This funding fee will severely punish holders of the other direction. So this will form as a way to correct the price back to where it is. So that's actually like if you look at that as a mechanic, the funding fee mechanic is actually very strong. Just for example, this year, Tomo, I shorted Tomo, but Tomo was trading around 10% lower. Like Tomo futures, which perpetual futures were trading lower than actual Tomo prices. So I will be taking a huge loss every hour. It was around 1% every hour for holding my position. But I was doing that because of farming. I had a particular purpose for it. But this will be an example where the funding fee will severely promote people off the actual asset. So people who are holding Tomo to come into this ecosystem and take advantage of the funding fee. So there's this kind of interplay, right? What I will argue with rebase tokens is that there's no such mechanic where you can force, say, cryptocurrency holders to buy or sell a coin to kind of affect the price of the rebase token itself. The rebase token, you kind of only relying on an internal mechanic there, which yet again, like I said, if it works, if people believe it works, but it doesn't work if people realize, okay, look, if I just look at market cap, it doesn't work anymore.
Well, okay, so real quick, I think I kind of followed you there, and I also want to make sure that we get back to the point you were making about how all
Okay.
rebase tokens are kind of just the same in the end because you speculate on market cap. So let's put that in our back pocket. But one thing that I kind of want to bring up, I don't fully understand the derivative situation that you just described, but it brings me to a certain point and a question I would like to ask you, which is there any synthetic asset or anything that exists right now where a price peg can be held perfectly with no degree of variance?
That's a very interesting question.
And so the reason why I ask it is because because we're criticizing Rebase's ability, or we're being critical of the Rebase function's ability to achieve a price peg. And I'd like to look at examples of other price pegs and see how well they do it and where there are kind of actually some flaws in almost every single price peg. So if you look at the most popular one in crypto, it is Tether, right? The main way to technically create a perfect price correlation is through reserves managed by a central entity where you say, hey, you've got $1 billion, there's a billion Tether tokens, each one is pegged to that. I should be able to redeem it from you for an actual dollar. So this Tether is a perfect peg to dollar. The problem there is that even then, you're playing a confidence game on whether Tether does have those in reserves or not. So technically, the peg isn't always perfect. Tether could just be full of shit, right? So a peg isn't perfect in the case of Tether. And then we look at DAI, which I like a lot more than Tether. It's a more transparent, decentralized dollar peg. But even then, it's backed up by one point of collateral, which is Ethereum. That means that DAI technically is vulnerable to significant dips in Ethereum price, which could be a single point of failure risk. So even then, you're playing a confidence game where you're kind of speculating on the price of ETH. And with Tether, you're speculating on your trust that Tether has what it says it has. In the case of Base and Rebase tokens, you are also playing a confidence game. And the confidence game is based around the network of arbitragers. You're speculating by holding base and hoping that it is going to peg to crypto market cap. You're speculating that the network of arbitrageurs is strong enough that it will peg price and make some good correlation. So the point that I'm ultimately trying to make is that there's no perfect peg anywhere. I mean, look at the dollar. The dollar was supposed to be pegged to gold over 100 years ago, and then
Well, the dollar is pegged to a dollar, right? Wrapped ETH will be pegged to ETH, right? That would be the perfect peg, almost. Okay, so assuming, of course, in the future we can have a free unwrapping of ETH. I like when I said that, I was like thinking like, what's a perfect peg in crypto? Maybe a wrap ETH to ETH, right? But even that's not perfect because it costs a little bit of gas to wrap and unwrap it. But assuming
so
gas prices will be free in the future, that will be the perfect peg, right?
so
Wrapped
what
ETH
I
to
am
a free
trying to
ETH.
what I am trying to suggest here, Michael, is just that if there is literally no perfect peg that exists, and we're just seeing people, or I guess projects, attempt different ways to just create correlation, right? Because DAI is not a perfect peg, Tether is not a perfect peg. However, they've served value in the market. I don't like Tether, but I've used it as a transition between trades. It's served value for me, even though its peg philosophically, fundamentally isn't perfect. And so with these rebase tokens, even though the peg isn't necessarily perfect, it just creates a correlation in periods where that correlation is stable. In those periods, it can serve a use case for the crypto market. And the last thing
Right.
I'd like to add to that
Mm-hmm.
is that
Mm-hmm.
in the case of Base, and what to me makes Base really interesting, is that the use case of a crypto index is so important, so powerful, and has no competitors today that that use case is going to be something that people value so much because it would really be the only way to speculate on the entire crypto industry right now. What I think is Ample's actual kind of challenge and why we saw such a big correction in their price is that although they are pegged to CPI, which is a unique differentiator, they're still technically competing with every digital dollar, right? They're competing with Tether, they're competing with DAI in a sense as the digital dollar stablecoin roughly. I'll lend to them that they've created a big differentiation. That's not any like I'm not trying to bash Ample in any way, but I am suggesting that a lot of people perceive that there is competition in the market. But in terms of a crypto index, it's just so a crypto industry index, it's so difficult to do. There would be so many custodial fees. It's impossible to rebalance a portfolio of 7,000 different assets that rebasing and creating a rebase that pegs to crypto market cap might be the only way to even achieve a full industry index. And that because that is so valuable, it's what's going to really reinforce the price peg in this case, I'd like to argue how projects that you mentioned like XETH and some of these other ones, one of the ones on that list is like Slink, which is a token whose price is just pegged to the price of Chainlink. They aren't creating a valuable use case. And because they're not creating a use case there, they're, I mean, for lack of a better term, I just don't see um, any long-term value there. But
Okay.
what I'm more interested in is the rebase tokens that are creating value.
I think also just well, I'll get one to interject because I'm even my team made this mistake again. So here we're referring to base protocol, so BASE without the D protocol. So like yeah, so unfortunately we accidentally tagged the wrong based with the D in there. So I just wanted to make a correction for everyone watching. I think I should have made this a lot earlier, but I just really want to make it like I think and also just to get the names right. So Nick, right? So we've been calling you Nick. That's okay, right? Because I see it as Naraman.
Yeah, I go by Nick. Yeah.
Okay. Now Nick, Naraman. Which one do you prefer though?
Nick.
Okay, Nick. Okay,
Just to keep it easy. Yeah.
so Nick is actually doing a really good job here. Like I definitely want to give him some cookies. I mean, I'm hitting it pretty hard, especially I think like for me, right? For me, I just believe I think I want to answer a few questions first, right? And that's kind of interesting. And I think this discussion actually became much bigger than everything else. But what's interesting is, first of all, Tether is a very, very imperfect peg, right? We kind of use it to pretend we have exposure to US dollar, kind of. But Tether's had these insane swings where when people don't believe that Bitfinex is solvent or if they don't have the funds, then Tether prices actually dip. So yes, I do agree that we need a form of exposure to the US dollar because people trade like that, right? People think fiat to crypto, or like that, and that bridge is very hard to create. So yet again, I think you're trying to like I don't disagree with the fact that you're trying to solve a problem where people also want exposure to all crypto. I think that's a great objective you're trying to create. And but so I'll give you that. I think that's the good point where I know friends who definitely want to have exposure, but yet again, at the same time, I think the mechanics, the rebase mechanic by itself cannot do it, because once people start trading more and more, they'll start realizing for a rebase token, just only look at its market cap, and yet again, it doesn't matter. If there's any sort of external mechanic, because we're actually talking about that on AMPL, which, like, for example, if they have a loan platform where one AMPL is always loaned to one AMPL, and then now you have some sort of external mechanic to kind of arbitrage that price out to kind of enforce a peg, that becomes interesting. And then just to point to Tether as well, during the situation of Tether FUD, so when Tether was dipping in value, what a lot of people who were very close to Bitfinex were doing was that they were buying they're buying Tether up like insane amounts of Tether, like millions of dollars per day, and then going to Bitfinex and then cashing that out to US dollars, and then going cycling that again. So that mechanic is actually very strong. It can deal with millions of dollars, if not hundreds of millions. This is like and this is something I knew, right? It was every single kind of OTC that was doing business in China and in Hong Kong, etc. If they knew the guys at Bitfinex, they were literally buying this for 90 cents, 95 cents, whatever, when Tether was dropping below $1. Even like I heard somewhere like 80 cents. They were basically buying these assets for 80 cents, cashing out for $1, and then cycling back in again and just buying more and more Tether, right? So this is a mechanic to enforce a price peg, because they can now move millions of dollars per day, and there was heavy incentive to do so. But I would argue that the rebase function will never create a situation where there are such strong arbitrages. So you don't have, like, let's say for example, if Base protocol, if you're establishing, people are looking at the dashboard and they say, look, right now Base is really overvalued. I want to just just extract the value out, like buy it either. Okay, if it's overvalued, then I need to dump it. If it's undervalued, then I can just buy the crap ton of it, redeem the underlying coins, whatever, dump those and buy more, right? That would be the ultimate. If this was a perfect peg, then this would be the ultimate mechanic to enforce that peg, right? Where you have people able to move millions, billions of dollars per day if this gets really popular. But I just don't see Rebase as something that would drive this kind of behavior.
So we're definitely getting to, I guess, kind of like the meat and bones here. I guess one thing that I would like to frame is really how important, right, the arbitrage actors are, because that's what you brought up. You don't see a world where the arbitrage activity is sufficient enough to support a stable peg, a stable correlation, right? And I can see where you're coming from with that, and it's really like a good framework for me to explain what makes a rebase token valuable and how it works, which is
can you move your mic a little bit closer? Sorry, just like yeah, there you go.
better.
Yeah,
Okay,
yeah, much better. Yeah, perfect. Yeah.
So the bigger the network of arbitrageurs is, the more stable the peg is. And the case that you're basically making is that you don't see these rebase tokens getting to a point where there are enough arbitrageurs to maintain the target stable peg. And one thing I'd just like to explain about this is that the idea that for Base or a rebase token to become valuable, it requires a network of decentralized participants. That's not unique to Base. This is how a lot of blockchain projects work. For example, Bitcoin, core value proposition, immutability, uncensorability, resistance to things like the 51% attacks. And if there's only 3 Bitcoins in the world and some guy can just buy 2 of them and now he controls the network, Bitcoin's not valuable. It doesn't have such great resistance to 51% attacks. But with more network participants, that's what makes Bitcoin essentially even more secure. Where now a large network as big as Bitcoin, the likelihood of a 51% attack is so slim. Because the network is so large, it is secure and therefore valuable. But if the network was small, you could argue that it would be valueless. Another example is Chainlink, right? The data feed oracles. An oracle is only as valuable as the amount of node operators that there are providing data. So if you've got a Chainlink oracle that's feeding the price of my water bottle, and there's only 2 people saying, feeding the price of that water bottle, that data is only so resilient, it's only so good. But if there's 1,000 people, that data is now really good. So the same thing applies for a Rebase token and Base protocol, where in this case, the decentralized network that you need, which will act as the plumbing for the
Yeah,
rebasing, is the arbitragers. You need the arbitragers. And in the
yeah.
beginning, there aren't
Yeah,
going to be right.
but at the end of the day, there is no mechanic for the arbitragers to rely on. What are you arbing against? You're only arbing against speculation, right? I'm only buying or selling, but I can't actually arb because there's no underlying asset to redeem, right? This is the biggest problem with Rebase because Rebase doesn't generate or doesn't hold the asset and doesn't have any opportunity. Like say for example, there's 2 examples where you can actually maintain a peg and maintain speculative. Like first of all, what the one I said was Tether, right? Tether wasn't also perfect. I mean, that was happening. We know for sure that was happening, and that's kind of what led Tether to crawl its price back up again because there was such a high demand for these arbitrators to get it. Obviously, you had to have good connections with Bitfinex, right? So that criteria was there. You had to know them and you had to trust them with their bank account to extract the US dollars out, and that was the mechanic that was going on. So literally, if you had good connections with Bitfinex, you can literally just say, one day, I'll send you the Tether, you give me USD, done, right? Call it a day. And that was kind of what saved Tether in the end from potential collapse. We had a few near misses there, right? And that was the mechanic. So there was an actual arbitrage opportunity. So these people at almost zero risk because they knew that they were so close. They're maybe even shareholders of Bitfinex. They knew with near certainty that they can redeem a Tether for $1. Right, and that was the so-called arbitrage opportunity, right? And the other situation where we have derivatives is a situation where, okay, if this is a TOMO index and there was a funding fee, then you can also sell physical or real TOMO or real Bitcoin or real whatever at the end of the day to take advantage of an insane funding fee. So that was a mechanic that arbitrators can rely on. So they knew what sort of income they would be getting and the profits they'll be taking from a said arbitrage opportunity. But for a rebase token, there is none such opportunity. There is no external factor. The rebase is just a rebase. So you can either buy or sell it and watch tomorrow's rebase. If you're not interested in watching rebases and you only watch market cap, then that doesn't even have any mechanic whatsoever of trying to maintain that peg. There's no reason to defend a particular peg or to reinforce it. There's no money they can extract from it.
Okay, so this is where I kind of want to talk about some of the other different Rebase projects that have existed before. And if you have the graphic, it'd be cool, but we don't really need it.
Yeah, we can throw it up. I think it's gonna be
Okay.
out here now. Okay, so
Yeah, so I can get started with just one of those examples, and I'd like to give a quick disclaimer. I'm not here to bash or FUD any project. I'm just kind of giving my opinion on certain things that I've seen. And I'll start with one of those projects that's there, which is Slink. Slink is a token, a rebasing token, whose price is pegged to the price of Link, Chainlink. So it's a synthetic which represents speculation on Chainlink. Now, again, just like any rebase tokens, any rebase token, you need a network of arbitragers to hold price stable there. And if Slink ever got to a point where it had a strong network of arbitragers, then sure, it could be a synthetic token which represents speculation on Chainlink. However, there's one core problem with Link, which is that it's entirely pointless. If you wanted to speculate on Link, you could buy Link. And this is a problem with a lot of rebase tokens that we're probably going to see for a while. And where there are rebase tokens that are building on this use case where they're just taking some arbitrary asset, especially an arbitrary asset that is a crypto, there's not much value creation. So there's another one that I've seen, which is XETH. It's a token whose price is pegged to the price of ETH. Again, you could just buy ETH. These are completely money game designed rebase tokens. And in some cases, that money game is explicitly a money game. They're not scamming anyone. They are just saying, guys, have fun with this, right? But the reason why I would argue there that they're going to have a problem building a network of arbitrage participators is that there's no core value to the asset itself. Whereas in the case of Base, we are building the first ever total crypto industry index. And why a lot of us are expecting that there will be a lot of arbitrage activity is that this is the only crypto index. And with the range of challenges that it would take to build a crypto index, I would venture as far as to say there will never be any other way to do a crypto index. And that if Base, a rebasing token as a crypto index doesn't work, then I don't know that there will ever be a really simple way to speculate on the entire crypto market. And so my suggestion there is that the core value proposition of what Base is so big that if people ever want to have this and use it as a crypto index, which is such a big value proposition in the market, there will have to be arbitrage actors. And so people will then act on that arbitrage more so than they would with rebase tokens that we've seen in the past or rebase tokens that don't create much value.
Got it. So is your project open sourced?
Yes.
Then can I just make another one?
Yeah.
Then now it has the exact same value proposition, no? Then now your argument just now was like you're powerful because you're the only one. Now we've seen already with AMPL, everyone's copying it, and you have a million versions of this. Can you help me do this? I'll just like let me just send this to you because unfortunately now you're the host, so I can't screen share.
Oh,
So it's like
have you
I
guys
send it to you
tweeted
just,
it?
yeah, I tweeted it. I just sent you
Okay.
the tweet on Telegram. Yeah, just so I can show you the
Okay.
rebase token. So
Yeah,
we've seen
I'll
like
show
a lot more, right? So Ample4, X Ample4, YAM, Rebase, Base Protocol, which is what we're talking about right now. So just want to make that clear yet again. I see some people very confused right now with Based versus Base, but this is a new one. They're creating a new token, and this has a complete different objective, not trying to target a dollar, but at the overall market cap of cryptocurrencies, which is what there. So anyways, we have that on screen right now. So this is a few of these base rebasing tokens, right? But yet again, I would argue because there's so many, right? This whole family is increasing. Then this family can target anything it wants, right? So yet again, I think the code's out there. The value proposition right now is cool. You can have the only one. But what if someone creates 100 of these tomorrow, right? They figure like this, they can start selling this for money. They can just click a button, fork your code, fork your dashboard, fork everything, create another one, and say, look, I'm going to sell to another group of people, and kind of completely devalue this concept overall, right? How do you protect? Like how you're saying that the value comes because you're the first one who thought about it, or you're the only one right now. But what about the millions of clones out there that can potentially kill this?
Well, I will say that we can make the same case about roughly any project ever. Chainlink, we're seeing competitors like Band, and that's just always going to be a threat with any newly emerging project. And what I will say that I'm arguing here is that obviously as a founder for Base Protocol, I think that we've got the best team. We're the ones who kind of came up with this idea. We're the first mover and everything, and I can go over every reason why I'm confident that we'll be the best rebase token pegged to total crypto market cap. But to your point, I'm not necessarily saying that we will be the one. There could be a clone, and that clone could take the top spot because it's got some better features or better mechanisms for rebasing, better parameters set up so that it's happening better, or a better staking program that people happen to like more. And the point that I'm making here is that yes, we are bringing Base Protocol forward to make a crypto index happen for the world, but it's not really about us or Base Protocol. It's just about achieving that mission. And of course, if some competitor came along and did it better and Base Protocol was a failure, I probably wouldn't sleep very well. But if that happened and they succeeded, great. And what I'm arguing to you isn't that base protocol is the one or the reason. We happen to be the first, but that if there is ever going to be a crypto index token, I I almost I venture as far as to say that it will have to be a rebase token. Now I feel pretty confident that we can be the ones, again, because we're first movers, we're a smart team, we've got great partnerships and everything. But that's not the case that I'm making. The case that I'm making is that it will take rebasing for a crypto index to happen.
Interesting. Interesting. Well, I would argue no. I think I would argue that rebasing, yet again, it goes back to the idea of the mechanic, right? The mechanic itself, right now, you don't hold anything, and it can be defeated by looking at the market cap. So I would argue no. I would argue maybe if you want to combine all the cryptocurrency assets, just wrap everything together on one particular blockchain, maybe that would be better. So then now, because the actual physical assets, or they're not physical, but like the actual coins are being held by a particular coin, that would be a better peg, because that would be where the index would actually contain or hold the actual assets. I'm kind of more on that ground. I mean, we're coming from a background where, you know, gold is gold, physical gold is not gold, right? I'm sorry, no, paper gold is not gold. It kind of like that. So, but this is even worse, because I mean, paper gold actually pretends to hold some gold, right? But a base token doesn't hold anything at the end of the day, right? So I would argue it's hard. I mean, why can't we just wrap a bunch of coins up? I mean, we're already wrapping Bitcoin on Ethereum, right? So wouldn't that be a more effective way of creating, like, let's say there was a competition between wrap Bitcoin that was actually like wrap Bitcoin and BTC versus Bitcoin rebase token, right? Which one would people choose? Which one would you have better arbitrage opportunities? I would definitely argue with Bitcoin. And would you agree or disagree?
Okay, I want to get on that in a second, but I want to go back to one thing you said, which was just that at least the dollar pretends to peg to gold.
No.
And
At least paper gold pretends to
at
peg
least,
to gold. Okay, so at least
okay, at least paper gold.
yeah,
Yeah.
so you know, you go to a bank and you buy paper gold, right? Because it's easier, because people don't want to store gold, right? So paper gold at least pretends to have gold, and pretends
Yeah.
to be able to redeem gold. Not dollar. Dollar has been unpegged for a long time.
Right. Okay. So at least paper gold pretends to be pegged to gold. And one argument that I would make is that that's not any better than rebasing, only because, like you said, it's still pretending. You're still having to put trust in some central entity that they have the backup for what they say they're giving you. And what's happening with rebasing is it's at least happening in a transparent, decentralized, programmatic, rules-based way where everyone knows how supply is being affected exactly through the smart contract. So there are some weaknesses with the rebasing model, but they also come with a certain strength as opposed to traditional pegging methods we see, like with Tether and with paper gold, as you put it. There's one point that I really want to make here, that is specifically relevant to base protocol. And I know that the focus is to really talk about rebasing tokens in general, but I do kind
That's
of want to
fine. I mean,
highlight
yeah,
something.
just highlight
Yeah.
your stuff. I mean, that's absolutely fine. I mean, that's the whole point
Cool.
of bringing you on
Yeah.
here too, right?
Yeah. So
You can be as chilly as you want, no problem. That's absolutely fine. It's
so
great.
there's one thing that I'm really interested in, and one thing that's cool is that as I frame it, I'll be able to explain one of the big weaknesses with rebasing tokens. So if you're going to create a rebase token, right? Let's say a token that's pegged to the price of gold, and gold in the real world is trading at $50, and your gold token is trading at 50. But then crypto markets just happen to take a tank for the worst, and they go down. So your gold token is affected by that simply because it is cryptocurrency, and this tends to be a historical tendency that when the market turns bearish, a lot of tokens turn bearish. They correlate. So that token goes from $50 to $40, which had nothing to do with the asset that it actually represented. This is a core problem for rebasing tokens. And as you know, we've seen a lot of people kind of like imagine how to spin up different rebase tokens for different kinds of assets and things, and how they can relate to different things in the real world. For example, AMPL, which, and again, I have all the respect and reverence in the world for AMPL for it, but its whole objective is to be pegged to CPI. But one problem that AMPL is going to face for a long time is that it is a cryptocurrency. And if cryptocurrencies go bullish or if cryptocurrencies go very bearish, that can have an effect on AMPL that has nothing to do with CPI. And so that's going to create a problem in their peg. But one thing
Right.
that's really unique about Base, and one thing that I will argue, and one thing we're really excited about, and why it's the best use case for rebasing, is that Base, its whole purpose is to correlate with the cryptocurrency market. So if Base is, it's pegged at 1 to 1 trillion, right? So Base is, if the crypto markets are 400 billion, Base is 40 cents. And our whole goal is to make rebases less frequent. We don't want rebases. We want a perfect correlation, as close to as possible. If crypto markets go up to 450, go from 400 million to 450 million, the odds that Base remained at 40 cents are very low. It's very likely that simply because of the
Is it though?
historical tendency.
I will argue this, right? Let me interject a little bit because you exit the gold discussion. I think that was actually a very discussion point because I actually want to tackle that because you're saying that rebase gold to you is more interesting than a bank gold, right? Because it's more transparent. But fundamentally, that's flawed because a rebase function would change the total supply of that asset. So it could be hypothetically possible to have more like let's say if it's like a if it's 100,000 grams of gold, right? So you can rebase to a point where if there's so much interest, you can now have more gold than there is on planet Earth, right? That doesn't make any sense, right? Now, even though it's more transparent, okay, great, right? But it doesn't contain or hold any relevance to gold. Yet again, it's like rebasing because it changes the supply of the overall token system, right? And you can argue that like with the AMPL as well. Now it might be pegged to something, but now the overall supply of AMPL becomes like the craziest currency in the world. It might have more supply than the entire
Right, there's a limit
US
to how
dollar,
big it
right?
can go.
Right. So yet again, like I said, there's no real arbitrage opportunity. Like at the end of the day, the bank paper gold has its current value. I mean, I'm not going to be delusional and say, look, the bank paper gold is worse than rebase gold, because at the end of the day, there is an arbitrage opportunity. I can go to like HSBC, as shitty as it is, as worse as the customer service is. I mean, like I can fill a form and say, yo, I want my paper gold to become real gold. They do actually offer that service, right? So there is that opportunity to arbitrage out of their artificial peg, and even they arbitrage themselves. That's why it's centralized, why it's all kind of broken. But at the end of the day, I can still take some physical gold out, right? But if you have a rebase gold function, yeah, where do I go to take my physical gold out? There is no arbitrage opportunity there. And I think this is one of the issues. Like you talk about AMPL4, right? AMPL4, it's not really maintaining it. And even if you're exposed to AMPL4 for any of these rebase tokens, because the rebase function doesn't change, the only thing that matters is the market cap, right? So how do you try to make that market cap like the same or stable? It's
I will
actually
say that we like one stipulation I have to say that we have to add every time you say market cap is the only thing that matters is that, truth be told, let's not say price does matter, but we have to say the rebase dashboard matters. That's extremely relevant to your trading decision. If you are
does
just
it though?
evaluating market cap, if you are just evaluating market cap for a rebase token purely and you're putting your supports and resistances there, you have extremely incomplete information. You're missing out on the fact that there's a fundamental driving factor here that's changed, because market cap, you see a line, you see supply times price, but you don't see supply and price individually. You just see the line of the end variable of the equation. So you don't know what price is and the underlying mechanism that's influencing price. So if you're looking at hold on real quick, if you're looking at a market cap chart for example, if you're looking at a market cap chart for AMPL4, you can look at every indication and see that it's bullish, but underlying that if AMPL4 is trading at $2, you're a little bit nuts to buy it because it's going to keep on expanding supply and it's going to come down at some point. And that's what rebasing is about yanking that leash. So it's not really just about market cap. It's just one
Right,
asterisk I'd
but
like
you're
to add.
saying, okay, so you're saying the overall mechanic, right, is the dashboard, right? The dashboard is going to tell you that information. But my argument would still be that eventually once enough people understand how a rebase function works, because at the end of the day, like you said, at $2, I would actually rather buy AMPL at $2 than like 50 cents. I would say that, because at $2 it can create this the pumpamentals are higher, right? People are thinking, oh, it's $2, I'm gonna get free rebase every day, right? That was the mechanic that kind of led AMPL forth to where it is today, right? Where people every day, if
The
AMPL
money
is
game.
above $1, it's a money game, and it's not just a money game. It's also there was a chart, right? There's a chart where it's an IQ chart. So the low IQ is like, whatever, if it's good, I'll buy it. In the middle IQ, like the average person who understands economics, they'll be like, oh, there's a million reasons why you shouldn't buy this, right? Which is the point I'm making now, right? So I'm the kind of a middle of the run, your average accountant rank. But then now the higher tier IQ play would be if you understand that people like this kind of mechanic where they get free tokens every day if they hold AMPL, and if they don't understand how these rebates works, if they don't want to go into these arguments, if you want the higher IQ play at that time would be, yeah, just ignore it, just buy it, whatever, who cares, right? Enjoy. If it's good, I'll
And
do it.
I make
I,
the argument that the higher IQ player is the arbitrager, is the one who
but
sees
how do
that.
you do arbitrage on this? How like what do you redeem? Let's say an arbitrage opportunity requires that you get some form of asset back, right? So if let's say if like yeah, if base protocol fell in price, and I say, okay, look, I'm picking these up for cheap, then where do I get my US dollars or get my coins back, right? I think that's the purpose of arbitrage, but you don't have any arbitrage opportunities other than a dashboard.
the so the way that the arbitrage works, and this isn't so much for you but more for everybody who's watching, is that I'm going to just go through the basics of how a rebase function works, right? If you've got a token whose goal is to be pegged to $1,
Yeah.
and then its price goes up to $2, you'll then
Yep.
have a rebase where you instead double the supply. So now they have two
Yeah.
tokens, and price is going to then drop down. So
Yeah.
they're each worth $1. But that's how it works in the long run. Now, if you look at things at a more granular level, the smart contract, the token protocol itself, can't actually make price go down. All it can do is multiply or divide the supply. So here's actually how it plays out. You have one token pegged at $1, but its price goes up to $2, and we want it to come back to $1. So we're going to double everyone's supply. So now you have two tokens, but the price is not yet adjusted back to $1. At this moment in time, you have two tokens, each worth $2. My answer to you, Michael, is that's the arbitrage. If you
Hmm.
act very quickly, when you go to market very quickly and sell that extra token that you have, that's where you're, getting your arbitrage profits.
That's an interesting argument. I mean, that makes sense. That makes sense. I mean, a few things, right? So on Uniswap, this happens instantaneously, right? Because it's based on pool, right? So you don't have that. But on everyone's tokens um, that's outside of the wallet, then what if okay, what then in a perfect scenario is that when the rebase happens, right? Everyone should arbitrage, right? Right.
Yes, we want a lot of arbitragers.
Hypothetically, if this really does become very, very popular, and if every exchange offers an automatic arbitrage service, and every wallet provider, let's say if you're holding this in your hardware wallet, and you can just click a service to automatically arbitrage it, then yet again your rebase function is useless, right? But I guess then
No,
that's a
well,
big
no,
if, right?
that's perfect. What you just described is the golden era, where exchanges are offering people an automated arbitrage situation where it sells when price trades above the rebase, immediately following a rebase. It buys when it following a negative rebase, and then what you say the rebase function is useless. Well, that's perfect because we're not having a rebase. The goal for us as a rebase token, it's just like I said, rebasing is a bootstrapping mechanism that is designed to go away. In the final state, it's just there as a safety mechanism in case things get too crazy. But in our final state, we want to get to a point where there's no rebases, where the arbitrage is happening at such a high frequency, fine grained level that there are no rebases.
That doesn't make sense. You still need the token still needs to increase or contract depending on the crypto market, right? So you still need an arbitrage, not between the token itself. You still need people buying or selling to maintain a value peg. So I think right now the biggest issue is that I think Rebases can maintain a perfect price peg, right? But you're shifting the volatility from price to supply. So now we can look at like either a market cap or a supply chart. And at the end of the day, let's say I actually want to use this to have exposure to the crypto market. I want this to accurately reflect what's happening. But the problem with that is that yes, it's accurately reflecting in terms of price what's happening, but because my supply is dynamically changing, I'm not having any sort of kind of exposure at the end of the day to the actual crypto market. I'm just having exposure to Base. So Base protocol, if it's very popular, okay, if it's so popular, it eats up the entire cryptocurrency market cap, then sure, yeah, then it is cryptocurrency, right? Then that's fine. But at this current point, I would say that at the end of the day, for these projects, because if you just look at the value, right, so the price times the supply, it's only dictated by the amount of interest in that particular token. So yet again, it's interest in the hype of a token. And that was why AMPL4 was getting so much momentum at a very high hype, and people were confused because the price was not very moving. So that was the initial confusion. But I think once people start understanding that, and that start, like I said, just ignore the dashboard, right? Just that's irrelevant. I can't pronounce things accurately, but that's irrelevant. So
And one thing we'll
just
agree to disagree on is I don't think it's irrelevant.
Okay. I think that's kind of the core, right? So tell me a little bit about the dashboard. Like, what's the mechanic there? Can you show me the dashboard and show me like what's happening there?
Let me go ahead
and what
pull
makes
it
it really powerful, right?
Sure. So here's our website, guys. Again, baseprotocol.org, not
Yep.
based protocol.
We definitely have to make that distinction. Yeah.
Yeah. And so this is the dashboard, and right now token isn't deployed. We're still in the pre-launch phase, but basically right now we've got a chart that shows crypto market cap and all 11 different sources that's being pulled from, like, Coin Market Cap, CoinGecko, TradingView, CoinCode. You guys get the point. That's all being fed through a Chainlink Oracle, where we're then grabbing the median value, and that's how we're determining at any given time what crypto market cap is. So at this point in time, according to the base dashboard, we're reading 395 billion, which means the target price for base is going to be 39.5 cents. Here we'll show the Oracle feed price for what base is trading at, and in a perfect world, that's going to be 39.5 cents. But if it's trading above the target price, you're going to see here that a positive rebase is going to occur, which is going to expand supply and give everyone bonus tokens. This is a timer that's going to show you when that rebase is scheduled to happen. And this box is basically just telling you what the current supply is and how the supply is about to be affected after the rebase. So this is pretty much where you're going to be tracking all that information, which I argue is important.
Right. Like I said, target base. Like, can you show that? Can you show that up? Like,
oh yeah,
that's kind of cool. I think the dashboard is cool. I mean, the dashboard. I mean, at the end of the day, right? I have no doubt that your token can maintain a price peg. There's no doubt, right? You can, I mean, yeah, you can rebase as many times as you want. I mean, by design, right? So hypothetically, you can design a token that rebases once a minute, right? So you can obviously maintain a price peg. But the biggest issue, of course, is that because the supply changes, right? Because you have elastic supply, like this would work if the supply was not elastic, right? That it's maintaining. If it was some form of mechanic that didn't change how many coins I had, I think this would be perfect. This looks absolutely fantastic. I mean, look, it's
okay.
This
is a perfect opportunity for me to interject. I'm sorry.
Okay,
but would you
go for it. Go for it.
Can you make a case though that in a world where your supply changed just barely, just sometimes within a 1% margin, that's still a valuable asset?
Absolutely. If it was just 1%, but the problem is we know crypto, right? Like no asset in the world is perfect. And the thing is, like, the moment it shifts drastically, it loses its fundamental value, right? That I think that would be the problem. Like if USDT, let's say hypothetically speaking, right, if USDT had these huge fluctuations every once a
Right.
month, even, right, where it varied 20% wildly, all right, or maybe even varied like 3-4% wildly, I don't think anyone would use USDT. I think they
It's
would use
worthless.
USDC and USD. So the problem
It's
is, I
worthless.
would say, it's like, can you think of another mechanic here? Like, I don't mind a rebase, right? But can we think of another mechanic that can help reinforce that price peg without causing a huge supply change? I think that's the biggest
Yeah.
issue here.
And real quick, I think I think that, and Michael, tell me if you'd agree with this. I can characterize what this debate has kind of come down to, which is that you know,
Mm.
there's one place where we have common ground, which is that I agree with you. For a certain period in the formative, more volatile period, especially with what you're going to see with the Rebase token, as base gets released and not too many people are aware of it, there's likely to be some expected exuberance and new adoption that's going to just disrupt the price peg. And where I do agree with you, Michael, and where some people, might not like me saying this, base doesn't serve its utility. It's not pegged. In that state, it's not serving its utility. It's this runaway kind of money game. But what I argue, and I think that where you disagree, and where we'll leave it kind of up to the community to decide where they stand, what I argue is that there is a world where after that adoption occurs in the formative state, where people are buying it up and the price peg is disrupted, it can reach a stable level where there are so many arbitrage actors that the big supply and market cap swings you're talking about don't affect the token so much. And where you disagree is that you don't see that world happening.
Interesting way of putting it. um I would say that it depends on the mechanic that you have, right? And I think um it's very hopeful to hope for a situation where there's that perfect equilibrium that can be maintained for a long time. And I would believe that it's not for us to hope for, but for us to fight for. So in that sense, the base mechanic is too weak to fight and enforce it. I think that would be the biggest issue. I mean, if you talk about other mechanics, like I said with Tether, right? Like Tether, at a certain point, they were just like throwing out US dollars, right? If you want to cash it in, that was one certain mechanic until, there were certain times when Tether dipped when they slowed down on that certain mechanic. So that's a very strong mechanic to enforce that equilibrium. So you can hope for it or you can fight for it. Now, I would say that the rebase mechanic is too weak of a mechanic for people to actively defend it with a significant chunk, right? So say if something like there is a sudden interest in the usage of USDT, they can, suddenly increase or suddenly decrease the total supply without affecting everyone else's supply. Here, the base mechanic is you're kind of relying on everyone hoping that this is the same thing, like everyone all believing that this is the same thing, and at the same time it's in an enforceable fashion. So I would say that this equilibrium cannot be reached because the mechanic is too weak to reach it, if you get what I mean.
Yeah, and I think that
So I
you know,
think, yeah. No, go on,
yeah,
go on, go on. Yeah.
and I'd love for us to put some cherries on this discussion, but that's I think that's perfect. That's my stance and that's Michael's
It's yours.
stance, and
Yeah.
yeah, and I would just encourage everyone in the community to take their own stance and look at different opinions in the space. One thing I will say is that Michael's really intelligent, and I've watched his videos for a while. He's one of my favorite key influencers in the crypto world, but there's a lot of different opinions here. If you guys look at Ample4, there's people like Brian Armstrong and Pantera who have backed that project, and they do their own diligence. And that's not necessarily an appeal to authority, but just to say, guys, make your own opinion. I think that we've got a lot of good information out here.
Yeah, I also hit you up pretty hard. I mean, I think, yeah, I did not hold back. I didn't really hold back. So I think I slammed you with something hard at the start, and then, I definitely admire you for putting up with me. Like this is, like there is a reason why we brought this debate up, because I feel like, at the end of the day, we definitely have to look at it. And I think, for Nick to represent a lot of the base functionality and put a few good arguments for it, especially when concerning with dashboard, and especially concerning these arbitrage opportunities. I think the one thing I really learned here is that there is an arbitrage opportunity when the rebase happens, because not everyone is going to buy or sell, right? So that kind of triggers a must trade environment if you believe in looking at prices. And I think that's kind of, also the kind of interesting thing here. I'll concede on one point where, a lot of people do believe that looking at price is important, right? And this is why AMPL also took off as well, because people only looked at prices. And my argument really relies, I would say the weakest point of my argument would be that, it relies on everyone understanding or only looking at market cap and ignoring the dashboard. But that's not hypothetically all that is. So I'll concede on that point. Like, not everyone's going to do it. I hope people are smart enough to do it, because at the end of the day, I would say, like I said here, $1. I have no idea how this is like a $1, but anyways, this is like a $1 and 4 quarters. They're the same thing. And that's kind of the rebase functionality. It doesn't offer the opportunity, but if people think they will be. So anyway, I guess that's kind of
Yeah,
it.
and to wrap on my side, the point that I do concede to, that Michael brings up, is that, there's the idea for base and a token like base is that it'll represent speculation on the underlying asset. So base, as we characterize it, is a crypto index which tracks the total cryptocurrency market cap. However, as Michael points out, base has its own market cap. It is its own
Yes.
token, and it's going to get its own speculation that is unique to that token itself and not relevant to crypto market cap. And that is going to disrupt the peg. And my argument, and where we do disagree, is that I think that we can eventually reach a state where there is an equilibrium, and Michael is less optimistic.
Yeah, and I think, yeah, less optimistic would be putting it very lightly. But yeah, I think so. I think that's kind of the summary of it. I think the rebase functionality is very interesting. I hope that kind of, describes it to you guys about what's happening. I mean, at the end of the day, let the market play out, right? I think that's why we have the discussion. Otherwise, I think there's no point, right? So I still feel like, there might be very high IQ plays here, which is very interesting. And we saw some very interesting dynamics of AMPL where its market cap just shot up to craziness levels. I'm sure Brian Armstrong and and Paul from Pantera is making bank right now. I love Pantera, by the way. But yeah, they're probably making bank on their token because they bought it for 5 cents and at a very, I think, at a maybe $1 to $5 million cap. I shouldn't say the price, because if I believe in caps, then I should say what evaluation they bought it at, and then they probably managed to sell it at $100 million valuation.
Yeah.
So yeah, I mean, that's interesting.
Yeah.
Yeah.
I guess, as we're probably, leaning towards closing this conversation up, one last thing I'd like to mention, I know I've had the opportunity to talk about the project a fair bit throughout this, but the one thing that I would encourage everyone to consider, as this whole debate has really centered around Rebase and the Rebase mechanic and Rebase tokens, is to really evaluate the use cases for every prior Rebase token that you've seen so far, and then look at the base protocol's use case. And if you are someone who is keen on the Rebase mechanic, I really would like to suggest to you that I think base protocol is the most exciting use case for rebasing. The crypto index is, if rebasing works in a perfect world,
do you want
the
to show your
crypto
website, by the
index
way?
is,
Like, I mean,
oh yeah,
yeah, feel
Let me go
free.
ahead and do
That's
that.
probably a lot easier, because I just don't want any confusion.
Yeah.
To
Yeah. So the total crypto industry index, I think, is really going to be the most valuable use case that we'll see from rebasing ever. And I love AMPL. They were an inspiration for rebasing and the elastic supply, but I will make the strong case that I think this is more interesting than a CPI tracker, because at the end of the day, that's basically a stable coin, a digital dollar. But here we're creating a new speculation instrument for a crypto index, which is something that you can't do at all right now. And there's a lot of really cool use cases that come from that. I hope that you guys check it out on the website. And the last thing I'd really kind of like to go over is, the different kinds of markets that could serve. And, that first of all is going to be just the general crypto trader, anyone who wants to diversify or hedge their crypto portfolio. And then the novice crypto traders, right? So the outside money. In a world where base is stably pegged to crypto market cap, this could be the way to really explain to these people, hey, you've heard about this cryptocurrency world. You might not understand it completely, but if you'd like exposure to it, you can just buy base and it's giving you exposure to the entire industry. So you can take all the guesswork out and just hold base. And lastly, for the institutional investors, as you mentioned earlier, Michael, where this could be really useful is that for them in the traditional, institutional finance world, we're seeing portfolios that obviously range across different sectors like technology or real estate or energy. And we're now seeing a lot of these people include cryptocurrency holdings in their portfolios. And for the most part, these holdings are just Bitcoin or some handful of other blue chip cryptos. But for them, diversification is key. So to have a token that they could hold, which speculates on an entire industry, it creates objectively more diversity. It could be a very powerful alternative. So in the world where base is pegged to total crypto market cap, this can create a lot of value in the crypto space. And I personally do, just again, maybe as a founder, I'm biased, but I think that this is the most interesting use case for a rebase token we've seen so far.
Cool. I hope that wraps up everything. I mean, like I said, for me personally, if I want to wrap everything up, look at market cap. Don't ignore the dashboard. It's useless. It's meaningless. Rebase is useless. but that's different.
And
That's
guys,
really to be different. So I hope that's like at least fun for you guys.
my only implication is that if there's ever going to be a crypto index, it has to be achieved through Rebase, and that's what we're trying to do with Base Protocol.
Got it. I would believe if there's a rebase index, wrap everything up and shove it in some sort of coin. But I mean, who knows, right? So, anyways, it's 2020. Hopefully, this will be interesting in a few years to come, and we'll see who's right. And I hope thank you guys so much for watching. If you have one additional information, I just put the website for Base Protocol up there, so there's no confusion. Yet again, I kind of had to apologize for all the confusion there. It's kind of stupid of me. But anyways, yeah. So with that, guys, I think rebasing is going to be one of the biggest topics for this year still, and I hope this was kind of fun and enlightening. So guys, leave it at that. Thank you guys so much for watching. Check out stuff. We got another live stream coming tomorrow. Check out the Base Protocol website, and yeah, we'll see you guys there. All right, cool.
Thanks, guys.
Cheers.